What's going on, guys? This is Aaron from Departures Capital, and we're here with Evan Gappelberg, CEO of Nextech3D.ai. It's a pleasure to have you on today, Evan. How are you doing?
I'm great. Thanks for having me.
Yes, of course. I'm excited to be talking about the company. So can you start by giving us a quick introduction to the company, along with telling us a bit more about what you guys do?
Sure. So I founded the company back in 2018 with this idea that augmented reality, 3D models, and AI actually was going to be the next big thing, the next mega trend. And 5 years later, it actually is playing out exactly as I thought it would, except I thought it was going to happen in 2019, 2020. It took a while longer. We had to navigate through COVID, but we're here today, and today it's really the dawn of a new era, and that is, this breakthrough technology that everybody's talking about, which is AI. We invested in AI back in 2021. We put $10 million into an acquisition target called 3D.ai, and they had a kernel of AI when we acquired them. And we also acquired with that acquisition our CTO today, who is an ex-Apple computer vision expert. And so we have the technology today to dominate the global 3D modeling business for e-commerce. And we back that up by being the preferred 3D model supplier for Amazon, which is the largest player in the e-commerce ecosystem. And so we are perfectly aligned as a company with this transformation that's happening. Everything's going from 2D to 3D, and we're using AI as our secret sauce to help us to scale. And AI is actually doing just that for us right now. We just announced in Q1, we delivered 20,000 3D models to Amazon, and we're really just getting started, Aaron.
Let's talk about some company-specific news. So the company recently reported sales surging over 550% year over year and record 3D modeling revenue for the first quarter of 2023. Can you tell us a bit more about this?
I mean, the numbers speak for themselves. We had a fantastic Q1 2023, but that really is just the tip of the iceberg. We expect Q2 to be better than Q1. We actually reported 40% sequential growth in Q1 over 2022 Q4 numbers, and we expect that Q2 will continue to see that kind of rapid growth. Q3, we expect it to accelerate again. And Q4, we think things are going to get really, really exciting in the business as Amazon opens up their marketplace. The thing that's quite interesting is that our business today, we're selling Amazon direct, Amazon corporate 3D models. We also supply others like Kohl's and Target. So we're not just an Amazon exclusive company, but the thing about Amazon, which is so interesting, is that there's something like 10 million merchants, Aaron, and they have a walled garden around these 10 million merchants. And if you bring a product onto the Amazon platform, it goes onto this thing called Seller Central. You bring your 2D photos, and that's what everybody sees on Amazon is 2D, photography shots. Amazon is about to open up Seller Central to 3D models. Has not happened yet. It's happening. And when that does happen, Nextech is one of the preferred 3D model suppliers that Amazon will recommend to its 10 million merchants, which represents something like 300 million products. Remember, I said in Q1, we delivered 20,000. It really is just a drop in the bucket compared to what's ahead.
So the company received $2 million in cash from a $400 million fintech company called Ratio Tech, representing zero dilutive funding. What does this mean for the company? Can you tell us a little bit more about that?
It's quite significant. So, historically, we've raised money just like every other public company by selling shares to the public. This allows us to not have to sell shares. We're not diluting shareholders. We're not selling shares. There's no warrants. There's no options. There's no convertible bonds, it's not a security at all. What we're doing is we're essentially able to sell our purchase orders. So we have some long dated purchase orders that some of our bigger accounts have issued us that are worth millions of dollars over the next 12 months. And what Ratio Tech has agreed to do is essentially give us $2 million against those purchase orders. And that's quite important because it gives us additional capital to grow our business. And what it means is that as we get new purchase orders, Ratio Tech is going to be there to cash those purchase orders into dollars today, even though we actually haven't even delivered the 3D models. And we will in the future, but we're getting paid today for 3D models that we're going to be delivering, potentially 3, 6, 9, 12 months from now. So it's a big deal because it gives us the growth capital and really the runway without having to dilute shareholders. And I don't think there's any other public company that I'm aware of that has that kind of financial flexibility.
Yeah, I've never heard that before. That's very creative and truly unique. So the company recently signed an enterprise renewal contract with the S&P 400 company for over 5,000 3D models. Can you talk a little bit more about this?
Yeah, we've been working with this big box retailer for a number of years now. We've created 5,000 3D models for them, and they're renewing. So, we get essentially about $160,000 now annually just to host those 3D models in our 3D cloud. So it's a very high margin business for us. And that was, I think, the second announcement we made related to that. There was one the week prior. And so we're starting to reap the benefits of all of our hard work that we did in 2022, in 2023, where we're not even having to produce new 3D models for those customers, and we're still able to make money. And that's very, very valuable for our shareholders.
So what sets your company apart from your competitors?
Well, there's a couple of things. One is, AI is driving our business to profitability. We have some really, really breakthrough generative AI technology that is essentially being created by the ex-CTO of Apple Computer, who's now our CTO. And what that means is that our ability to create a 3D model is going into hyperscale, meaning we're going to be able to create more 3D models than anybody, any of our competitors. And really the best part for us is that the cost is going to go down to, I'm not going to say nothing, but we're going to have something like 90% profit margins, which is software-like profit margins. So if you think about productivity, that's what AI is driving. It's driving this massive, massive increase in productivity. And Nextech is a direct beneficiary of that because we've been working at it. Remember when we started talking, I told you about this $10 million acquisition we made in 2021. That's now paying dividends in 2023. And it's going to start to pay significant dividends in the second half of this year as that AI starts to take over our 3D model factory. Right now, the AI is not fully autonomous. It's very similar to the Tesla autonomous driving car. You could do some things today. You could, the car is somewhat semi-autonomous, but not fully autonomous. Our 3D modeling is very similar. It's semi-autonomous, but not fully. But when it gets fully autonomous, that's when our margins are going to really, the margins already are moving up quite significantly at over 50%, but we think we can hit 90% gross margin. So I just don't think anyone's going to be able to compete with us. I think what's going to happen is we're going to be the last and only company standing because making 3D models is not an easy business. Most companies are going to just tap out. They're going to run out of runway. As we just mentioned, we have financing from Ratio Tech And obviously, as a public company, we could always raise capital through stock issuance. So we have a significant competitive advantage that's going to keep us in the dominant position as the 3D model supplier for the $5.5 trillion global e-com ecosystem, which is actually, I just read the other day, on its way to becoming a $50 trillion global ecosystem. Right now, e-com only represents something like 16% of all commerce. It's going to be 95% by the year 2040. So lots of room to grow.
Tremendous growth potential. So let's talk a little bit more about AI. So as AI rapidly gains popularity in the marketplace, where do you see the true opportunity? And, how does the company plan to potentially capitalize on this?
So as mentioned, we are continuing to invest in our AI. Our AI is getting stronger. We actually have almost like an incubator mentality where we have created a number of AI-powered technologies. One of them is the 3D modeling business for e-commerce. That's the most advanced. That's the one that's generating the majority of our revenue. But there's two other businesses actually that have sprung up around some breakthrough generative AI that we've created. We spun off a company named ARway, symbol ARWYF in the US and ARWY in Canada. And they use AI to create spatial maps, essentially indoor wayfinding using augmented reality. So we create shareholder value by issuing a stock dividend and incubating and spinning out as public companies these AI-powered technologies. So we did that once in October of 2022. We're about to do it again, Aaron. In June, on our June 13th, we will be doing our second IPO spinout of a breakthrough generative AI company called Toggle3D.ai. The symbol in Canada is going to be TGGL, and it's a 3D design studio, takes CAD files and converts them into lightweight web-based files. And it uses point-and-click technology, again, all powered by generative AI, so that you could change the color, change the texture of the 3D model. It's breakthrough technology that's going to compete with Adobe Substance. So we're very, very excited about that, and that's on deck.
Lots of exciting things to come for you. So finally, where's the best place for investors, prospective shareholders to find out more information on the company? Where should they go?
So if you go to our website, Nextech3D.ai, there's a very, very significant investor section that has videos of me. It has research reports from Zacks and H.C. Wainwright and Singular Research. So there's three different analysts that cover us. H.C. Wainwright, I think, has a $2.50 price target, and he's got a pretty full research report that you could read. Zacks just came out with an updated report on Yahoo Finance that you can download. So there's tons of information out there. We're not hidden.
Well, thank you so much for sharing all the info on your company. It's going to be an exciting year for you, Evan, and I look forward to having you back on for more updates.
Thanks, Aaron.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.